Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the Australian dollar rallies further and closer to its objective of 65 to 66 cents as the US dollar slips deeper into the red. As the market now waits for the midterm election day results. Meanwhile, investors are also bracing for the results of the latest update of the US inflation. With all eyes looking towards this Wednesday's CPI number, no doubt we will see further whipsaw price action and maybe even a weaker dollar, as the fact that the forecast is lower than the last two releases, that is seeing the CPI around 8%. In September, the market was 8.2 and in August it was 8.3. If we do see a weaker number, that would put further stress on the dollar index, which measures the greenback strength against a basket of six major currencies as it sits now towards 109.22. Viewing the pattern for the Australian dollar, we can see that the market is very close to the 60-day moving average, but still holds to a relatively bullish stance. I would like the ADX to support the current move up, but the last three challenging upward days has clearly been a bullish and also a firm rise as the market continues to hold its gains. Any pullback, I do feel, will be temporarily, and looking at the support now is seen around 64.65. The call to the upside for euros getting very close, which is around 101 to 103. Now, as I mentioned, the dollar index was weaker. There's only about 100 points left on the downside and reassess from 108. That would mean that the euro could most probably claim around that 101 to about 102. 103 that is a little bit more of a stretch. So I feel we might be a little bit shy of 100 points. But 101 to 102 is viewable as successful, and therefore the current technical aspect is also holding well. And that would indicate that the market pullback will probably be shallow, anywhere towards 100.30. The market bears are cheering as we now reach the first objective of 145.6580 after printing an intraday low of 145.29 this morning. I feel from the current pattern and into the fourth price action that we are looking towards 143.40-60 area and reassess from there. With any advances, I do feel may find supply around 145.80. Looking at sterling, the market still maintains its bullish stance since it did break above that 114.25, re-challenged it and rejects it. From there, I feel that we are looking further to the upside, and that is towards the region of 116 to 118 as a potential target, with the immediate view to 115.90. Any weakness should continue to find support around that 114.30-40 area. Well, since the market broke through that level of 1,666, I feel that the market might be a little bit short due to the fact that we crushed the level of 1,691 to 95 and reclaimed the 1,700 handle. In light of the pattern, there is still a little bit more room to the upside, maybe towards 1,729 to 33, and then maybe some profit taking may come in. We've got here rather quickly, and therefore, like previously when we rallied from 1,620 up to 1,729, reversed sharply and erased all of those gains. So keep an eye on that top side level in case we see a similar pattern. Having rejected that top side level around $92.25.55 a barrel, the market is weighing on the support again and now focusing on the level of 87.5, and a break beneath there would give further scope towards 86 to 84 as a potential target. The technicals are heavy, and since that topside rejection does put a little bit more favor into the bearish outlook for West Texas. Well, that wraps it for the morning. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the great start to the day.